Hey everyone, welcome back to the channel. So in this video we're going to be covering HEX versus Doge, the kings of ROI, this bull market cycle. I can't believe I'm saying this, but if you like this kind of hybrid technical quantitative analysis, make sure to leave a thumbs up. Be subscribed by the end of the video if you aren't already, and let's go ahead and compare these two coins. So if we're comparing based on a fair point in time, which I'd argue could be March 13th of 2020. Why? Because all markets, I'm saying all markets, equities, stock market, S&P, crypto, it all dipped that day. It all dipped anywhere from I think 40, 50, 60% over the course of just like a few days. So I think that's kind of like a fair reset point to say, okay, let's measure ROI from that point. And we did this in a previous video, calling it 2020 through 2021 bull market ROI, the race is on. And I'll leave a card here again so you can check that out if you haven't already. And at the time that we made that video, Doge was actually outperforming HEX in terms of ROI from this bottom, right? We're normalizing ROI from March 13th of 2020. And at the time we did that video, Doge was actually slightly ahead of HEX. And keep in mind, we're doing these analyses without interest. This is before interest. So keep that in mind, right? And so if you look at either one, you would have been well off. If we're being real, you really would have been well off if you didn't invested, put literally any amount of money into most cryptos really, but HEX and Doge have outperformed. They've been absolute beasts. And let's look at the characteristic shapes of said rallies. So as you can tell here, HEX is the pink curve and Doge is the yellow curve. They are scaled together to be normalized from ROI from March 13th, 2020, as I've said like twice in this video already. But yeah, this is what it looks like, right? You can see that HEX was overperforming for the longest time before we actually got the mega pump, right? That shot Doge from, I think it was like the 3 to 5 penny region or so, up to we're talking 30, 50, 60, 70 cents. And currently this is where we are now. As you can tell, Doge is approximately up about 307x from March 13th, 2020, whereas HEX is about 311x from March 13th of 2020. And this is before interest. Because if you account for interest, right, some people, if they were staked through big payday, are up anywhere from 40 to 70% on their coins, right? Their holdings have increased. So if you look at their actual ROI, they're looking at something closer to 600x, something like that. So, if we're being fair and not counting interest, this is what it looks like. If we want to be realistic, right? Because you can stake HEX, you can't stake Doge to earn interest on your coins. If we're being actually realistic, then this pink curve would actually be somewhere around here. So we're not only overperforming on this chart, which is kind of conservative, and I think that's bullish, right? Because again, this is before interest. So I've talked about this in the past, the fact that, let's be real, okay, both coins have very strong communities. However, the game theory on HEX, I just think is better, right? Like, we have memes too, but at the end of the day, you have to ask yourself, which of these coins will persist through the next bull market? And it might be both. It really might be both. But as you can tell, HEX is overperforming, and in my opinion, it has a higher likelihood to persist through multiple years and multiple market cycles, just because of the relevancy that will be had because people are staked for so long, right? Like, if you're staked for 10 to 15 years, you're really not going to be fighting your bag until maybe 10 to 15 years later. I hope you see what I'm getting at, is the fact that you can sell your Doge at literally any given moment. And if you're liquid in HEX, that's true as well. But a lot of people are staked, right? 10% of the system, and on average 5.67 years or something like that. So I do think that HEX has a high potential, a high probability of remaining relevant for future market cycles to come. And if you look at the curve here, you can kind of see that Doge was just pretty much flat this whole time, flat until it kind of went exponential. And mind you, this is a log chart, so this is an absolute tear on Doge. I'm not taking away credit from it by any means, but if you look at HEX, it's kind of more sustained, right? It's more of like, if you look at our exponential fit, on a log chart, it's pretty much, steady linear growth on these bottoms actually. And so, I don't know. I guess you kind of have to ask yourself whether you want a coin that just steadily goes up, gains interest, steadily goes up, gain interest, has only, I think, less than a quarter million, or probably more at this point, less than a third of a million, surely right now, holders, versus something like Doge, which I haven't checked actually, but I'm guessing, my guess would be Doge has more holders than HEX right now. So would you rather a coin that has more potential and linearly goes up, or one that already is almost maxing out its potential, in my opinion, and has really just gone up based on memes and, you know, has gone up super, super quickly here at the, you know, this year specifically? I don't know. Personally, I'd rather be in a coin that pays me interest, so I can just chill for years and steadily see the price appreciation multiplied by my interest, which actually puts HEX rightfully back in its throne as the king of ROI this market cycle so far. And I mean, it has been. How long did it actually go beneath Doge? April 16th through May 12th. Literally just a month. It gave its throne to the Doge for a bit, but we're back on track, right? And again, if you count interest, well then HEX has just been king of ROI this whole time. Maybe with the exception of, yeah, because I think yeah. Maybe not the whole time, right? If you include interest, I think there actually is a slight, maybe week or two in here somewhere where Doge actually did take the throne. So let's give it its fair credit where it's due and say, you know what, Doge, you got us. You flipped us for a bit. The memes were legendary. They were too much, and here we are now. But that's what it is, right? So I really wanted to cover this, especially because there was a comment in a previous video that said compare HEX versus Doge ROI. And not only that, right? If you've made insane multiples, if you've made great ROI on Doge so far, not financial advice, never financial advice on this channel, your generic disclaimer for this video, but you might want to preserve your wealth, right? There's this great quote, I believe it was on Ben Cowan's channel, and he spoke of this. He said, you know, if you want to grow your wealth, concentrate it. If you want to preserve it, diversify it. And with that kind of investment thesis, once you've made your multiples, once you've made, you know, 30, 50, 100, 300x, as we can tell here that these coins are sitting at, if you'd bought at the, you know, March capitulation, then it might be time, again, not financial advice, but you might want to consider taking profits from Doge and diversifying it to preserve your wealth. And what better thing to diversify than something that pays you interest and has been steadily going up and has more or less, for more than 95% of this cycle, been the king of ROI, right? The trend is your friend. It will continue being the king of ROI until it isn't. And we saw a period of time here where, you know, it backed off a little and gave Doge the spotlight, which is fine. Okay, it's possible, right, for certain coins to come through and pop a little above this, but then at the end of the day, I don't see it being sustainable, and that's just my opinion, right? I could be wrong. Doge might just absolutely kick HEX's ass. I just don't see it personally. But again, I don't have a crystal ball. I have no idea what's gonna happen. Let me know in the comments below whether you think, you know, what's gonna transpire, because this is quite the battle. They're toe to toe. But I'll repeat, this is before interest on HEX, so whether you want to count that or not is up to you. You know, if you want to just be staked or remain liquid, because there's a trade-off, right? Yeah, there's a trade-off. So we'll leave it at that. We'll leave it at that for the HEX versus Doge ROI. And I want to get into some HEX stuff, right? Because that's what you're probably here for. And so let's look at this current wick that we had. This is beautiful, in my opinion, because it reminds me of this wick over here, right? Terrible circle. This wick over here, and this wick is probably longer here, but more or less, when you see a wick to the downside, a long wick to the downside, that generally indicates a lot of buy pressure, and price really just hit that for a little bit, this 4.3 penny region or so, for a bit, and then it got bought right back up into the 5.7. I think it was like at 6 pennies earlier, into that region, right? And I do want to point out the fact that this dip here, if we take a price range, was, get our magnet tool, from high to here, about a 36% dip, right? A nice little 36% dip. And why is that significant? Well, we talked about this in a prior video. Do you remember? When we were looking at this fractal, right, saying we might be in this expansion fractal. We talked about this a lot. I'll leave a card here so you can check out our first fractal video where I covered what could be playing out. But more or less, I said, look here. If we take a price range from this point in the fractal down to this dip right here, our first real like significant dip within this kind of this was more than a 10x, by the way. Let's actually take a measured move real quick from the time we kind of had our end of that mini accumulation phase, testing this all-time high over here. We'll call it that. We had about a 12.3x. And so again, if we take it from here, testing this high over here, we are currently sitting at a, what is that? 391%, so almost a 5x. But keep in mind, how high did it go here before it dipped 40%? Well, price went up 6x and then dipped 40% and then went up another, 3.5x. So we currently went up 4x, right? So 25% less than over here. We dipped, what was it? What did we say? 36%, which was approximately like 10% less, assuming this dip is over, right? And then we would go ahead and go up another. Here we went up 3.4x, but given that this is slightly reduced volatility, then you could argue maybe we just go up 3x from here, which would put us at around 12 or 13 pennies, right? And there are many, many ways you can look at this, but I do think that a 40% dip in the middle of this big old rally looks way too similar to this to just ignore it, right? To not point it out, especially with this big wick to the downside. Because if you look at over here, it wasn't really even a wick, was it? Let's reload it real quick. That's funky. Why does the chart look like that? Regardless, this looks bullish to me. Again, this looks so much like a fractal from over here. If you want to take a quick bars pattern, we can actually take a look at how similar these moves have been playing out. And we've covered this on an actual Google sheet, right? What the fractal looks like. But let's zoom in a bit and show you with a bars pattern. Let me try to align these bottoms. And there you go. There you go. So slightly slower than last time, but it's forming similar structure, right? Where we had this crazy rally and we sort of had this dip and then formed this kind of ascending triangle over the course of, how long did we form that ascending triangle over the course of? April 22nd or so. We broke it on around April 28th. Could argue April 29th. So about a week of forming some sort of bullish structure here. So could we see the same? Potentially. I could see it. Maybe May 20th, right? So what would that look like if it played out similarly? Well, you can see it here on the bars pattern, but let's say if it were to play out slightly different, well, then maybe instead of seeing an ascending triangle, we see a bull flag or something, right? There are plenty of bullish formations we could see. But let's say it's something like another ascending triangle into May 20th, May 21st, then it would look something like this, and then a final 3x from this point would send us probably to like 12 or 13 pennies, right? So around here. So I could see it playing out something like that. Again, not keeping up exactly with this previous fractal, but more or less it's been really, really damn close to the point where I don't think it's smart to ignore it, right? Awesome. So let's go ahead and look at the final thing I wanted to talk about in this video, which was liquidity, because this stuff is moving every single day. It's kind of fascinating to me. The fact that this is what our liquidity looks like now. Now, let's zoom in a bit just so you can see it a bit better. There we go. So right now, this red line is where price is, by the way, at any given moment. And you can see that liquidity ranges, well, the majority of liquidity, this kind of uniform distribution, this flat kind of block of liquidity, where you could argue the majority of it is between 5 pennies and 10 pennies. And notice right after 10-cent hex, the order book gets really, really, really thin. And you could argue, well, you do have a spike here at like, 9.5 pennies. These might be the guys trying to front run the 10 pennies. But let's say, hypothetically speaking, hex were to continue rallying into this fractal that we've talked about, and this fractal were to play out. And let's say, again, hypothetically, we just blast through these limit orders here at 9 pennies, maybe see a little wick to the downside, nothing major, continue on. What happens when we blast through 10 pennies, assuming this liquidity stays the same? Well, I don't know if you know about thin order books, but it's kind of blue skies from there. So I could see this happening, right? Let's say, again, thought experiment were to reach 10 pennies today. What happens if you pump through it? Well, it would probably go straight to 12 cents just because there's very little liquidity here. And then another hypothetical scenario, if we blast through 10 cents, well, then it would probably go straight to this liquidity spike at 14 cents, right? So this is bullish to me, the fact that, because when you provide liquidity on Uniswap V3, you're essentially speculating on price, okay? And this is different from previous versions of Uniswap where you just provide generalized liquidity. But on Uniswap V3, every time an LP provides liquidity, he pretty much has to speculate on price now, and you kind of get an insight into people's minds of where they think price will go. And I guess you could use this assumption that anyone who knows and is willing to provide liquidity on Uniswap is probably a smart cookie, right? And so their speculation on where the price might go might be a little bit more valuable than most speculation. And this is just kind of like a little assumption. Might not be true. But given that fact, I do think this is bullish, the fact that LPs are speculating that price will be chilling between 5 and 10 pennies. Maybe it's based on the fact that price has been between 5 and 10 pennies for the past few days, right? 5 to 7 pennies or so. So, and beyond 14 cents, right? It's pretty much clear skies up to 36 cents, assuming this liquidity doesn't move, which is very unlikely, to be honest. That's why we're keeping you updated on this every day, because liquidity does move. I mean, LPs have been shifting their liquidity pretty much every single day, right? Look at this, it's kind of cool. 3.69 million locked. Yeah. So that's the video. Let's look at where we are on our regression rainbow real quick, just to kind of finish off. Didn't want to talk about this as well. Let's load. There we go. That we crossed through yellow, we blasted through it, and then we're kind of coming back to test the yellow region, which is the first kind of little blip down we've had ever since the 1.3, 1.5 penny region. And so notice, right, we were talking about this fractal for a long time on the regression rainbow, and the fact that maybe, right, we speculated maybe we consolidate on the orange curve for a bit before pumping to the purple, but now things are kind of changing, so we have to update our analysis. Excuse me. Back here, we consolidated around yellow. Well, what if we're not dropping a regression curve, right? Just think about that. What if we don't? We might not. And so what if we consolidate at the same level we did over here? What if we consolidate around yellow? Well, I mean, it's likely, given the fact that price consolidated around yellow over here for about a month and then popped off to the pink. So what would that look like today if price consolidated around yellow for a month and then popped off to the pink? Well, that would have us consolidating between, what is this, 6 and 8 pennies, almost 8.5. So that would have us consolidating between 6 and 8 pennies for the next month. And again, it might take longer to play out, right? Because this accumulation lasted about 100 days. We've said this so many times. The accumulation over here between red and orange lasted about 200 days. So what if it takes twice as long to play out? Then we might be consolidating around yellow for 2 months. So what would that look like? Well, it would be consolidating up until July 15th between 8 and 12 pennies. And then popping off to the pink, maybe, again, 2 months later, might see us September, $2. Super bullish, I know. And let's say it played out exactly the same, non-lengthening cycles, and we just, again, exact same thing, 1 month consolidation around yellow, 1 month to pop off to pink. It's a little more conservative. Well, then we would be consolidating between 6 and, again, 8 pennies for about a month. And then by July, we would be looking at $1. So remember that blow-off tops can get really heated. When crypto's in a bull market and you have euphoria, things can get really, really heated. We saw last summer, we had our DeFi summer. There are a lot of coins that were just popping off left and right. So something with product market fit and a great community, great fundamentals, great technicals. It's only a matter of time, in my opinion, right? So remember, if you enjoy this kind of quantitative and technical hybrid analysis, leave a thumbs up. Definitely be subscribed by now. It's a 20-minute mark. What are you doing if you're not subbed? Let's get to 1,800 subscribers next. I appreciate you watching, and I'll catch you in the next video. Peace.